Hi friends, my name is Krishna. Welcome back to my YouTube channel. Today we are going to learn second illustration from CA Institute material. I already explained illustration 1 and today's video I am going to explain illustration 2. So I request you to watch this video till the end. You will definitely get good learning out of it. Right? Without wasting much time, let us get into the subject. Okay friends, let us get into the illustration 2. See here, I have given the problem, illustration 2. I took it from Institute material and this is where I am going to resolve this problem, right? So, one thing I request all the students to keep in mind is, whenever there is a problem given to you, what you need to do is, first you need to read the problem in total. You need to spend at least 5 minutes to read the problem and understand. Then you start putting your solution. That should be the right practice. Even when you attend for an examination, CA Foundation or 11th, 12th or BCom, BBA, any course you do, when you start resolving a problem, the best practice should be, first you need to read the problem, understand the problem, and then start working towards the solution. That should be the best practice, right? So, having said that, let me start with this problem. Illustration 2, what it says, prepare the ledger accounts on the basis of following transactions in the books of a trader. They are saying there are some transactions given here and they are asking us to prepare the accounts, ledger accounts based on these transactions. What are those transactions they have given to us? Debit balance on January 1st, 2020. This is the year ending. Year beginning. Year beginning, January 1st, 2020, they have given some transactions. What are those transactions? Cash in hand, 8,000. So that is the cash available on 1st January. That is opening balance. Cash at bank, 25,000. This is also opening balance in the bank as on 1st January 2020. And we have inventory of goods, 20,000. They have inventory of goods 20,000 worth beginning of the year. Building 10,000. Trade receivables. Trade receivables are nothing but these are the amounts to be received from Vijay and Madhu. Basically, these are the debtors. Trade receivables are basically debtors. So Vijay has to pay 2,000 rupees and Madhu has to pay 2,000 rupees to us. These are the debit balances. Then credit balance on January 1st, 2020. Trade payables, Anand 5,000, capital 55,000. You know capital, I don't require to explain. 55,000 rupees is the capital brought in by the proprietor. That is already there as an opening balance. And trade payables is basically amount payable to Anand. This is a liability. So these are the opening balances they have given in the problem. These are the opening balances given in the problem. Then let us move on to the other one. Following were further transactions in the month of January 2020. These are the transactions for the month of 2020, January 2020. These are the transactions they have occurred. They got into this kind of transactions. Okay, let us know what are those transactions. Purchased goods worth 5,000 payable at later date for cash less 20% trade discount and 5% cash discount. Guys, here this is very important. Purchased goods worth 5,000. They purchased goods worth 5,000 for cash less 20% discount. So this 20% is a trade discount. Discounts are two types, trade discount and cash discount. Wherever you see a trade discount, the trade discount need not be accounted in the books of accounts. You need not account that trade discount in the books. What you need to do is this 20% you need to straight away calculate on 5,000 and arrive what should be the net purchases. So whenever you see a trade discount is the discount will be given to the buyer at the time of purchasing the transactions. So while we are negotiating or while we are purchasing the goods itself, they gave 20% discount. That 20% discount will be treated as a trade discount, and trade discount need not be shown into the books of accounts. That is very clear, right? Next, 5% cash discount. This 5% cash discount has to be disclosed in the books of accounts. The reason is cash discount is the discount given to the buyer at the time of making payment to the supplier. At the time of making payment to the supplier, so cash discount has to be accounted, right? Then received 1980 rupees from Vijay and allowed him 20 rupees as discount. Here you see Vijay is supposed to pay 2000 rupees to us, but how much he paid? 1980. And what is the discount? 20 rupees discount. I'll explain with all the journal entries here, okay? Then purchased plant from Mukesh 5000. Purchased plant from Mukesh 5000. This is for credit. Nowhere he said purchased plant from Mukesh for cash, right? They didn't mention about the cash. Since they said purchased plant from Mukesh, that means what? This 5000 rupees worth of plant purchased for credit. That is the meaning of it. Please remember that. And paid 1000 rupees as charge for bringing the plant to the factory, and another 200 rupees as installation charges. Any amount incurred, any amount paid for bringing the machinery or an asset to the factory should be capitalized, and any installation charges incurred for installing the machinery is also supposed to be capitalized. When I say they are supposed to be capitalized, they are supposed to be debited to your machinery account. Anyway, I'm going to explain all these things while I'm explaining the journal entries. Then sold goods to Rahim on credit. We sold goods to Rahim for 600 rupees. Did they mention anything about cash here? No, they mentioned credit. So since they mentioned credit, this is a credit transaction. Clear? Next, Rahim became insolvent and could pay only 50 paisa in a rupee. How much we sold to Rahim? 600. So he paid 50 paisa per rupee. That means 50% of this amount he paid because he became insolvent. Insolvent means he became bankrupt and he doesn't have money to pay. Hence he paid only 50% of the 600 rupees. Right? We need to prepare a journal entry how to post this transaction. Next, last one is sold goods to Ram for cash 1000 rupees. We sold goods to Ram for 1000 rupees. These are the journal transactions happened during January 2020. These are the transactions happened during January 2020. So what we need to do is we need to prepare the ledger. But if you want to prepare the ledger, you should know what is the journal entry, right? Once you know the journal entry, it is easy for you to post those transactions into ledger books. So what I'm going to do now is I'm going to explain the journal entries for all these transactions and explain how to post them into the ledger books. Okay, let us start. So what I'm going to do now is first start from here. Debit balance on 1st January 2020. Cash on hand 8,000. They said cash on hand 8,000 rupees here, right? So what we need to do now is when I say cash on hand 8,000, cash on hand is an asset. All assets are debit balances. So cash account I need to prepare. What I'm supposed to do? I need to prepare a cash account. Since cash on hand is an asset, it is a debit balance. In debit side of the cash book, I need to put it as to balance brought down. What I'm supposed to do? To balance brought down. So what I'm going to do now here is I will put this as debit balance here. So what date I need to put? 1st January 2020. I put the date here and to balance brought down. Why am I putting this in debit side? Because cash is an asset. All assets are debit balances. Hence, I am keeping this amount in debit side. So 8,000 rupees is the amount. So this is done. Right? Now, next one is cash at bank 25,000. Cash at bank 25,000 means there is a balance available in the bank books, bank account. Right? This is also an asset. Cash at bank is also an asset. So we need to prepare a bank account. We need to prepare bank account. bank account I mentioned here, and I need to go to, since cash at bank is also an asset, I need to put this amount in debit side of the bank account. What date I'm supposed to put? 01/01/2020. Date to balance brought down. So how much I'm supposed to put here? 25,000. Clear? Right. Next, inventory of goods 20,000. I have a goods worth 20,000. So I need to prepare goods account now. Goods account. So what I'm supposed to do? Goods is also an asset. So I need to put that in debit side. Same thing, I just copy paste here the same date here. I'll copy and paste it here, and I'll say to balance brought down. How much I'm supposed to put here? 20,000. Okay. Next, building 10,000. So now I am supposed to put building account here. So what I'm supposed to do? Building account. Building account, again same date I need to put here because it is on 1st January 2020 date. So here what I'm supposed to do? To balance brought down. Why am I putting this in debit side? Building is an asset. Assets are debit balances. So building is how much? 10,000. So let me go and put 10,000 rupees here. Building 10,000. Right. Next, again go up and see what is there. Trade receivables. Vijay 2000, Madhu 2000. So for Vijay we need to prepare one account. For Madhu also we need to prepare another account. Let us go down and prepare Vijay account. Again, trade receivables is also an asset. So what I'm supposed to do, I need to put that balance in debit side of the account. So here to balance brought down. How much is the balance in Vijay account? Vijay account has 2000, Madhu account has 2000. So here what I'm supposed to do, I will go down and Vijay account I'll put 2000. Similar way, I need to prepare Madhu account. So what I'm supposed to do, I copy paste the same thing and put it here as a debit balance. So Madhu also I prepared an account, right? Madhu 2000, Vijay 2000. Why did I put a debit balance there? Because they are receivables. It is an asset. All assets are debit balances. Hence Vijay account I mentioned as to balance brought down 2000. For Madhu account I mentioned as to balance brought down 2000. Clear? So this total line we have accounted now, posted. Now credit balance on 1st January 2020. Trade payables Anand 5,000, capital 55,000. So what I'm supposed to do now? Go here. Anand account I need to prepare. Anand account. Trade payables they said here. Trade payables, Anand 5,000. That means what? I'm supposed to, business is supposed to pay 5,000 rupees to Anand. That is a liability. All liabilities are credit balances. All liabilities are credit balances. So in Anand account, where I'm supposed to put? I'm supposed to put by balance brought down. How much is the amount? I forgot. 5,000. Date, same January 1st, 2020. Let us put the same date. Are you clear now? Right. Then we need to prepare capital also 55,000 they have given, right? Let us prepare capital account. Capital account. Capital is also a liability, right? Capital is also a liability. So all liabilities are credit balances. So this 55,000 where I'm supposed to show? I'm supposed to show in credit side of the capital account. Credit side of the capital account, what I'm supposed to do? By balance brought down. How much? 55,000. So let us copy paste here so that we will not waste our time in typing. Right? Right. Now are you clear? So what we did so far, we have completed these many transactions. This line and this line. Credit balance also we completed. So all opening balances we have created accounts and we updated the opening balances in the books of accounts. Are you clear so far? If you are not clear, please comment in my video. Wherever you have a doubt, please comment so that I can clarify your doubts. Once my student subscribers got increased, I'm sure I'm going to conduct weekly ones live sessions in YouTube and I will clarify all your doubts chapter wise. Chapter wise, I'm going to clarify. But unfortunately, my student subscribers are not up to the mark. So once the subscriber base is increased, I'm going to organize a live session so that you will get clarity for all these doubts in case if you have anything. Right now what you can do is you can comment in my video. I will look into your comments. I will try to clarify your doubts. Right now we have completed the opening balance. Now we are getting into the transactions. Here you see purchased goods worth 5,000 for cash, less 20% trade discount and 5% cash discount. Guys, here what we need to do is, let me clarify that to you. We have purchased goods. How much? 5,000 worth. Right? 5,000 worth of goods we purchased. How much trade discount they have given? 20% is the trade discount they have given. 20%, when I calculate on 5,000, it will come to 1,000. That means what? My net purchases is to the extent of 4,000. So I purchased it to the extent of 4,000. In this 4,000, again they have given 5% cash discount. 5% on 4,000 is going to be again how much? 200. That means what? 3,800 is the net payment we made for this purchases, cash purchases. Right? So what entry we are supposed to book for this? Please remember this. I purchased it for 5,000, 20% trade discount, which we are not supposed to show in books of accounts because trade discount, we are not supposed to show it in books of accounts. So we just directly reduce that amount from 5,000 and arrive 4,000. So 4,000 is the net purchases, right? Let me clarify. Let me put that in entry mode. When we purchase goods, what we do? We debit purchases account 4,000 and we got 200 rupees discount. That means what? How much we paid? 3,800. So to cash account 3,800 and we got the discount of 200. That is an income. So discount account 200. This is the entry we are supposed to post. Now let us say how to enter this transaction. What we did here, purchases account. Did we already create purchases account anywhere here in top to bottom? So far we have not created any purchase account. See there, first account is what? Cash account. Then what we did, we created a bank account, we created goods account, building account, Vijay account, Madhu account, Anand account, capital account. But we did not create purchases account. So let us create purchase account. I'll just copy paste this so that it will be easy for us to do. So I'll change this as purchase account. And I need to remove this. This is capital account related, right? I removed it. So what we did purchases here, we debited purchases. So we have to put this transaction in debit side of the purchases. What date this transaction was happened? Let us go and see. What date? Purchase transactions on January 1st. Let us go and put 01 01 2020. So what we did? We debited purchases, hence we are writing in debit side of the purchase. What are we supposed to do? We are supposed to debit to cash. How much? 3,800 and to discount 200. This is how we need to record the transaction. So what we did, We completed purchase account. Now we need to record this in cash account also, but cash account we have already created on top. So let us go to cash account. What we did cash here, we created cash. So we need to record this transaction in credit side of the cash account. So I need to go to cash account. This is the cash account. Credit side, what I am supposed to write? I need to start with the by. Cash account is what? Credited, right? By whatever is there in the debit we need to write. So what I'm supposed to write here? By purchases. Here the beauty. What should be the amount I need to update? Purchases opposite 4,000 is there. No, you are not supposed to show 4,000 here. Cash account is created with how much? 3,800. The amount which is mentioned opposite to cash account should be mentioned here. So that is 3,800. Guys, this I already explained in my previous video. Once again, I'm explaining. When I'm recording this in cash account got credited, hence I'm writing this in credit side of the cash. What is that I'm supposed to write? Whatever left in debit side I'm supposed to write by purchases. What amount I need to mention there? Whatever amount mentioned opposite to cash account I'm supposed to write here. That is 3,800. What date I'm supposed to put? I'm supposed to put this as January 1st, 01 2020. Clear? So then one more account is left here, that is discount account. Did we create any discount account here? Let us see. Did we create any discount? No, nowhere we created the discount account. Now we have to create a discount account. So I'll copy paste the same purchase, I'll take this as an example and copy paste here, right? Instead of purchase account, what I'm going to do, I'm going to make it as discount account, right? Here, where do I need to record? Discount account is what? We credited, right? So we need to write that in credit side. Credit side, when I am writing by discount account. Sorry, by purchases account. I'm sorry. By purchases account. Why I'm writing purchase account? Discount is credited, right? Hence I'm writing this in credit side of the discount account. But when I am writing this in credit side of the discount account, whatever is left in purchase account, I need to write here. So by purchase account. But what should be the amount I'm supposed to put? Very important. Purchase account I write, but I should not write 4,000. What I'm supposed to write there? Whatever amount I mentioned opposite to discount account should be mentioned here. That is 200. Guys, be very, very careful. This point, this is where majority of the students will commit the mistake and they lose the marks. So don't ever commit this mistake. What we need to do is, I am crediting discount account, hence credit side I have written. Right? When I am writing in credit side, I have to use the description available in debit. What is the description? Purchases. So by purchase account. But amount wise, what amount I am supposed to put here? Whatever amount mentioned opposite to discount account should be mentioned here. That is 200. Then what should be the date I am supposed to put here? I am supposed to put 01/01/2020. That's all. So this transaction is over. Right? Let us move on to the other transaction. So purchased goods worth 5,000 is over. Right? I am going for January 4th transaction. Received 1,980 from Vijay and allowed him 20 rupees as discount. See here, how much we are supposed to receive from Vijay? 2,000. See here, receivable from Vijay 2,000. Vijay is supposed to pay 2,000 to our business. But how much he paid? He paid 1,980 and we gave him 20 rupees discount. How do we record this transaction? Let me explain the entry and then we can post that. So we received cash 1,980. So cash account debit 1,980. This is very important. How much cash I received? 1,980 cash I received. So cash account has to be debited with 1,980. And I gave a discount of 20 rupees. The discount is an expenditure for me. All expenses and losses are supposed to be debited. So discount account debit 20. Discount account debit 20. Right? Then what I'm supposed to do? Who is the one paid this amount? 1,980 for us? Vijay. So giver is Vijay. So what I'm supposed to do, to Vijay account 2000. This is the entry I'm supposed to book. Now let us record this transaction. First one, cash account is debited here, right? So I need to go to cash. Cash account we have already created. Let us go to top and see where is the cash. So cash account is here. So January 4th. So 04/01/2020 is the date. So cash account is debited. So I need to write this transaction debit side. What I'm supposed to do, debit side, I'm supposed to write as to Vijay. To Vijay. What should be the amount I'm supposed to write? This is very important. Whatever amount I mentioned opposite to cash. Why opposite to cash I'm taking? Because I'm debiting cash account. What account I'm preparing? I'm preparing cash account. I'm posting this transaction cash account. So when I'm posting the transaction cash account, whatever be the amount mentioned opposite to cash account, I have to mention here. That is 1980. Are you clear? Right? Now, cash account we have recorded. Now what is left here? Discount. So we have already prepared a discount. There are two things which you need to keep in mind. See here, you have already prepared a discount account, guys. See here, this discount is already there. But there are two ways of accounting. One, this discount, whatever you are showing there, here, this is discount received. This is discount allowed. Two ways of accounting. Discount received you can show separately. Discount allowed you can show separately. Two different accounts you can maintain, or you can club together and make it as one account, right? So I'm clubbing this in one account. In case if you want to make it as separate account, you can do that, right? So discount account, what we did, we debited. So we need to debit this transaction to Vijay. To Vijay. How much I'm supposed to put here amount? How much amount I'm supposed to put? Whatever amount shown opposite to discount account. 20. So I need to put 20 rupees here. What should be the date? 04/01/2020. That's all. This is how you need to put. Clear? Then we are left with Vijay. This also we have not recorded. What we did Vijay here, we credited Vijay. So Vijay account is already prepared, right? Go to Vijay account. Right? Vijay account is here. Now Vijay account, what we did, we credited. So we need to write this in credit side. Credit side by whatever is there in debit side, cash account and discount account. These two things I need to write. By cash 1980, by discount 20. This is how you need to write. What date I am supposed to put here? 04/01/2020. Same you can copy paste down 20. Right? With this entry got posted. Clear? I am coming one by one and I'm showing how those transactions have been recorded here. Right? Go up and see what should be the next transaction. What is the next transaction? Here, this is already done. Purchased plant from Mukesh for 5,000 and paid 100 rupees as cartage for bringing the plant to the factory and another 200 as installation charges. This is something I will write a journal entry. How do we write a journal entry here? See, purchased plant. When we purchase plant, plant comes in. So, plant account debit. How much we purchased plant? 5,000. And 100 rupees we paid as a cartage charges and 200 rupees for installation charges. All the three put together you need to debit plant account because cartage and installation will be treated as a capital expenditure. This cartage and installation charges will be treated as a capital expenditure. So how much I'm supposed to debit plant now? 5,300. Whatever amount we spent for bringing the plant should be added to the plant. And whatever installation charges you incurred, that also to be added to the plant because they are in the capital nature. They are treated as capital expenditure. Hence, you need to add those two expenses also to your plant. So plant account 5,300 to, we purchased this plant from Mukesh for credit. When we purchase plant from Mukesh, we have to pay 5,000 rupees to Mukesh. We did not pay. We did not pay that. So Mukesh 5,000 to cash 300. Why to cash 300? He said very clearly 100 rupees cottage paid. Paid they mentioned. This 100 paid and 200 also paid another installation charges. This 300 they paid, but they did not pay 5,000. So 5,000, since they did not pay, that I credited to Mukesh because I am yet to pay that amount to Mukesh. 300, why am I crediting cash? Because that amount is already paid. So plant account debit 5,300, to Mukesh account 5,000, to cash account 300. Now we need to prepare the postings now. How do we post it? Right. Do we have a plant account already created? No, we don't have a plant account. What I'm supposed to do now? I need to create a plant account. Let me copy paste this here down, and this, let me change, not a purchase account, I'll say plant account. Clear? So plant account, what I did here, I debited plant. So I need to write this in debit side of the transaction. What I'm supposed to write in debit side? To Mukesh account. How much? 5,000. I have to pay 5,000 to Mukesh, and to cash account 300. This is how. Plant is debited. So I need to write it in debit side. What is left in credit? To Mukesh, to cash. To Mukesh, to cash. So put together 5,300. So plant account amount, whatever amount mentioned, opposite to plant account is matching. This is 5,300. Clear? Now, plant account, what date we entered this transaction? I forgot the date. Let me go up and see. Plant account we purchased on January 8th. Go down, January 8th. So 8th January 2020. So copy paste the same thing down. So you got it. Now Mukesh account I am supposed to prepare. Do I have a Mukesh account anywhere on top? No, right? Anand account, Madhu account, Vijay account is there, but there is no Mukesh account, right? So I need to prepare a Mukesh account now. So what I'm supposed to do, let us copy paste again Mukesh account here. So here instead of plant account, Mukesh account, right? Mukesh account is created here. So I need to write this in credit side by plant account. Plant account I need to write, but what should be the amount I need to mention there? Whatever amount mentioned opposite to Mukesh, I need to put here. What is the amount mentioned opposite to Mukesh account? 5,000. So let us put 5,000. What date? This is happened on 8th January 2020. Are you clear now? Right. Mukesh account we did. Now we are left with cash. Cash account we already opened. Cash account is already opened. So let us go to cash account. So here cash account is credited. Now I have to go and write this in cash account. So cash account, where I'm supposed to do, I need to do this in credit side of the cash account. Credit side of the cash account, what I'm supposed to do? By plant account. Plant account, what I'm supposed to do? I'm supposed to write the amount which is opposite to cash. That is 300. What date? 8th January 2020. Are you clear? Any doubts? Cash account is created, hence I am writing this in cash account. Whatever left in debit I have to write, that is plant account, and the amount which is opposite to cash has to be mentioned here, 300. So plant account we created, right? Down. Can I go and show you? See, plant account we have already shown 5,300. Mukesh account we have shown 5,000, and cash account we have shown 300. So this is over now. Let us go to one more transaction. This is done. Sold goods to Rahim on credit 600. So when we sold goods to Rahim on credit, very clearly mentioned. So when the goods are sold on credit, what I am supposed to do? What entry I am supposed to put? So Rahim Rahim account debit 600 to sales account 600. This should be the entry. Rahim account debit 600, sales account credit 600. This should be the entry. So do I have a Rahim account? I don't have Rahim account. So I need to create Rahim account now, right? Right. Let us prepare Rahim account now. Let me copy, go down. Go down and prepare. I'm just copy pasting here just to make you comfortable. So Rahim account I prepared. So Rahim account is debited here. So what I'm supposed to do, I have to write this in debit side. Debit side, what I'm supposed to do, by sales account, to sales account, sorry. How much I'm supposed to put, whatever be the amount showing opposite to Rahim account, that amount I have to show here, 600. What date I'm supposed to do, I forgot the date. Let me go back. This is on January 12th. So let me go and update the date as January 12th. So 12/01/2020. So 12th January, we updated this. And we are left with the sales account. Do we have a sales account anywhere here? Did we prepare sales account? Let me check. Purchase account is there, capital account is there, Anand account, Madhu account, Vijay account, building account, goods account, and bank account and cash account. We don't have sales account. So you need to prepare a sales account now. Let us go down and prepare one more account called sales account. Sales account. Sorry. Okay. This Rahim account, I'll make it as sales account. Right? Now, sales account is credited here, right? So I need to write this in credit side of the sales account. What I'm supposed to write? By Rahim account. Rahim account, how much I'm supposed to put? 600 rupees. What date I need to put this transaction? 12th January 2020. Are you clear now? So this transaction is also posted by us. Move on to the next one now. What is the other transaction we have? Rahim became insolvent and could pay only 50 paisa in rupee. 50 paisa in rupee means 600 divided by 50 paisa means what? He paid only 300 because he could not pay that amount. Now, what entry we supposed to post for this? So, guys, let us understand. What entry we supposed to post here? Rahim paid 300 rupees. So that means what? We received cash. Cash account debit 300. He did not pay remaining 300. He is not going to pay because he became insolvent. Since he is not going to pay this 300 rupees to us, that will be treated as a bad debts. That will be treated as bad debts because he became insolvent. He became bankrupt. He is not going to pay that amount to us. So when he became a bankrupt, that amount we are not going to recover. We, in the sense business is not able to recover that amount. Since business is not able to recover that amount, that 300 rupees will be treated as bad debts, which is loss to the business. All expenses and losses are supposed to be debited. So what we do is we debit bad debts account 300. And who paid this amount? Rahim. So to Rahim account 600. This is how the entry is supposed to be posted. Are you clear about the entry? Now, let us post this transaction. So cash account debit. So we have already prepared a cash account, right? Cash account debit side we need to write. Debit side, what I'm supposed to put? Go up. Debit side, I need to record. So cash account, what I'm supposed to do? To Rahim account. Rahim account. How much I'm supposed to put? Whatever amount shown opposite to cash account. Opposite to cash account, how much I shown? 300. So I need to put only 300 here. What date I'm supposed to put this? This is on January 15th. 15th January 2020, I'm supposed to put this amount in cash account. Are you clear? Right. Now, next one is bad debts. Bad debts account is debited. Do we have a bad debts account already opened? No. So you need to create one more account called bad debts account. So let us copy paste one more account. So here, instead of sales account, what I do, bad debts account. Bad debts account. So what I'm supposed to do here, bad debts account is debited. So I need to write in debit side of the bad debts account. That is on 15th January 2020. So to Rahim account. To Rahim account. Sorry, 1 second. ACCO account. Right. How much amount I'm supposed to put? Bad debts account is debited with 300. Right? Whatever amount shown and no opposite to bad debts account I need to put here. That is 300. Clear? So bad debt account is created. Now Rahim account 600. This also we need to record. Did we open the Rahim account already? Yes. Rahim account is already available. So Rahim account we credited here. So we need to credit this in Rahim account. By cash account. This I already explained. By cash account. How much? 300. And by bad debts account 300. This is how this transaction has to be recorded. The date is 15th January 2020. Are you clear now? Clear? Right. So this transaction has been posted. Now let us go up and see whether there are any transactions left. Yes, sold goods to Ram for cash 1000. When we sell goods to Ram, what entry we put? Sold goods to Ram for cash, very important. We sold goods for cash. So cash comes in. So cash account debit 1000 to sales account 1000. This is how the entry is. Let us record it. What do we do here? Cash account we debited. Let us go to cash account. So debit side to sales account. How much I am supposed to put? 1000. What date? This is happened on 18th January 2020. So cash account I recorded. Sales. I think we have already created sales account. Let us go and see whether sales account is already available. See here, sales account is already available. So sales account is created here. So I need to write in credit side by cash account. How much I'm supposed to put? 1000. What date I am supposed to put? 18th January 2020. Right? This is how this transaction has to be posted. Now you see whether there are any transactions left. Nothing. So we have posted all the transactions. Now we are left with balancing these accounts. We have completed all the transactions, right? We have done. Posting is done. Now what is left? We need to balance the account. How do we balance it? I already told you while doing the balance, each account I will explain how to do the balancing. I already explained while doing the balance, the first and foremost rule what you need to keep in mind is you have two sides, debit and credit. Which side you have a higher balance? Which side you have a higher balance? Here you see you have a balance of 11,280. Here you have a balance of 4,100. So debit side you have higher balance, right? So you need to total this. So then you get 11,280. Then you need to put the same amount of 11,280 here. This is what I explained. Then you need to subtract this amount from these balances here. So minus subtracting this minus subtracting this. How much I got? 7,180. So what I'm supposed to do by end of the January, 31st January 2020, what I will do, I'll write this as by balance, balance carried down, right? This is what I did. And next month, I need to brought down this. Since carried down has come here, brought down should come this side. So to balance brought down 7,180. That's all. Cash account is already done. Let us go to bank account. Bank account we have 25,000 balance. Then which side you have higher side? This side. So let us total this. So 25,000. Same amount you need to put here, 25,000. Do you have anything here? Nothing. 25,000, you need to put the same balance. Here what we need to do? Buy balance, carry it down. What date? 31st January 2020. Right? Since carry down has come in credit side, brought down will come by, sorry, to balance brought down. How much? 25,000. Guys, I forgot one point here. You need to put the date also. Next month date 01/02/2020. So here also I need to put the same date. I forgot to mention here. So let us put 1st February date. If you miss all these things, they will deduct 1 or 2 marks, half mark, because you did not mention the dates there. So you have to be careful. So bank account is already balanced. Now goods account. Goods account we have a debit side 20,000. Let us total 20,000 and put the same amount here, 20,000. Do you have any balance to subtract here? Nothing. Let us put the same 20,000. So by balance brought down. So date 31st. Let us copy this so that it will be easy for us to, no need to waste our time. Okay. Then brought down also we need to bring in here. Sorry. So balance carried down. Here what we do, to balance brought down 20,000. What date I'm supposed to put here? 01/02/2020. Clear? Next, go to building account. You have a building account of 10,000 balance here. Let us put the same total here, 10,000, and put the 10,000 rupees here, and you don't have anything to subtract. So put the same 10,000 and make it as by balance carried down. Right? And then what I'm supposed to do? To balance brought down 10,000. What date I'm supposed to put here? 31st January 2020. And here what date I'm supposed to put? February 2020. Clear? Then coming to here, Vijay account. How much we have total here? 2,000. Let us total 2,000. How much we have here? Here also we have 2,000. There is no balance required in this account because the total, both the sides, the total is same. Whenever there is a total, same total in both the sides, you just need to total it and leave that account. So this account is over. Next. So here, what we are supposed to do in Madhu account, we have 2,000 balance. Let us total 2,000 and then put the same 2,000 here, right? And put 2,000 here. And what I'm supposed to do? By balance brought down. Right? What date I'm supposed to put here? 31st January 2020. Right? Then I need to bring in this as opening balance 2020. So what I'm supposed to do here? To balance brought down. How much? 2,000. Clear? This is how the balancing has to be done. Anand account. You see Anand account, we have a credit balance. So total it. When I total this, what will happen? Same 5,000. So same 5,000 let us put here. Then you don't have anything to subtract here. Put the same 5,000 and what you need to do to balance, carry it down. To balance, carry it down. Guys, here it is not brought down. I'm sorry, it is carried down. To balance, carried down. Okay. Now, to balance carried down 5,000. Since carried down has come in debit side, now brought down has to come in by balance brought down 5,000. Clear? Right. Next, go to capital account. You have balance here. Total it 55,000. Then go here and put same amount of 55,000 sorry, 55,000 and put the same amount of 55,000 and make it as to balance carried down. What date? 31st January 2020. Then here you need to bring in as brought down. So by balance brought down. How much? 55,000. Here I forgot to mention the dates. If I miss out, sorry guys, don't mistake me because the video is becoming so lengthy. That is the reason I'm a bit, you know, hurry in closing this. Right here, I'm supposed to put 31st January 2020. Okay, I already put the date here. Here I'm supposed to put January 2020. Clear? Then purchase account. Let us total this. How much it is coming? 3,000, 4,000, and put the same 4,000 here and no balance to subtract. Then what I'm supposed to do? By balance carried down. Which date? 31st 31st January 2020 and to balance brought down 4,000. This is on 1st February 2020. Clear? Then move on to discount account. Discount account, this side we have higher value. So let us total that 200 and bring in 200 here and you are left with 190, 180, 180. Correct? 180. To balance carried down on 31st January 2020. Then you need to bring in by balance brought down 180. This is on 1st February 2020. Right? Next, plant account. Plant account, let us total here 5,300. Let us put the same total here 5,300 and put the same total 5,300 here and by balance carried down on 31st January 2020 and bring in here as to balance brought down 5,300. This is on 1st February 2020. Clear? Then Mukesh account. Mukesh account we have 5,000 total. Total it and bring the same total here 5,000, nothing to subtract. So put the same 5,000 and make it as to balance carried down. This is on 31st January 2020 and bring in as by balance brought down on 1st February 2020. This should be the same 5,000. Clear? Then Rahim account. Rahim account, let us total this 600, debit side and credit side amounts are same. No need to do any balancing here in this account. Then go to sales account, which is higher side. Let me insert one column here, one row. Total this side 1,600. Same amount you need to put this side. Do you have anything to subtract? No. Then make it as to balance carried down. This is on 31st January 2020. Again, you need to bring in here down by balance brought down. How much? 1,600. Right? Then here I need to total this 300 and bring in the same total here this side 300. nothing to subtract, so put the same amount here by balance carried down on 31st January 2020. I think I did not put the date on top. Let me put this is 1st January, sorry, 1st February 2020. Right? So carry down is done. Here, what I'm supposed to do, to balance brought down. How much? 300. What date I'm supposed to put? I'm supposed to put 1st February 2020. Clear? This is how. If at all I miss any dates here, guys, please excuse me because I'm in hurry in closing this. So video is becoming very lengthy. That is the reason I was bit rushing to close this account. So this is how the entries are supposed to be posted and each account has to be closed. So I explained every transaction and I also explained how to post the transactions and how to balance the, each account in this video, right? Hope you like the content, and if you like the content, please like the video, subscribe to my channel, and share this video with your friends and colleagues. Right? Thank you so much.